Good morning, everyone. Morning. It is June, not July yet. June 27th is the last week of June. And much news that's coming out. We're slowly creeping up to that election day, which is in a few months. And it is indeed showtime. So Biden and Trump are going to go on a head to head tonight in American TV tradition that dates back to the 1960s, actually, the presidential debate, which is going to be hosted by CNN, a division of Warner Brothers, and it'll begin at 9 p.m. Eastern Time. It's going to be too late for me. It'll last 90 minutes, including 2 commercial breaks. Now, CNN's Jake Tapper and Dana Bash will be moderating with some new rules that will be implemented, such as muted microphones, except for when a respected candidate has their turn to speak, and no studio audience. So more than half of the U.S. adult population will be watching the showdown, with 57% of the public saying that they're, extremely likely or very likely to tune in for at least some of the debate or follow-up commentary about it, according to a new poll from the AP and the NORC Center for Public Affairs Research. And more than a third are also highly likely to listen or watch the first of the 2 scheduled debates live, showing just how important the platform is to establish an edge in the high-stakes race. So expect a range of topics from immigration and foreign policy to fitness for a second term. But for investors, on the investor standpoint, a lot of the focus will be on the economy, naturally. That includes things like the jobs market, taxes, the federal deficit, inflation, general costs of living, which have many Americans watching their bank accounts and wallets. And it'll also include sectors related to investments, such as environmental rules surrounding oil and gas, or regulation that pertains to the healthcare market or real estate. Now, the futures markets are going to be open throughout this time. It might be interesting to watch. I'm not going to be very active on that, right? 9 p.m. Eastern isn't very late for me. And voters remember the pre-COVID Trump-era economy fondly, and they are frustrated by the fact that price levels and interest rates remain high, even if the rate of inflation has come down to a degree. And the debate is about the economy in the respective first terms. Trump wins, wrote Evercore ISI analyst Sarah Bianchi, right? So Biden's job is to avoid spending too much time focusing on the macroeconomic defense of the economy and his record. He must pivot the conversation to the 2 competitive visions for the future. Voters tend to support his ideas of having corporations and wealthy pay their fair share to a degree. Biden could also package and criticize a set of Trump's ideas, from tariffs to tax cuts, as inflationary. He might be able to make some progress. Again, these are not my words, I'm just quoting. So, realistically, in terms of the stock market, we've seen a rise of 58% since Trump was elected in 2016 through 2020, compared to the 64% seen in the following election from Biden with 4 months to go. So while looking at the returns from when they took office, the S&P has climbed 67% with Trump in the White House, and 44 under Biden to date. Of course, there have been many different things that have occurred throughout that period, but it's going to be interesting to watch and see how the markets react. We're also coming into a very weird holiday week, as I've quoted this past week multiple times. I've got the data. So Monday, Tuesday, markets are fully open, regular trading hours. I'm talking futures here. Wednesday and Thursday, the futures market closed at 1 p.m. Eastern time both days, which, nonsense, right? You can't trade those. Friday, it's open full day again, but realistically, going into Friday after 2 days of nothing is going to be dead. So the first 2 days are probably also going to be dead, with maybe some spikes here and there in prices, but generally speaking, volume and volatility is expected to be very low next week, with the fact that we have 2 days in the middle of the week that are just kind of muddled, right? Just like, was it like 2 weeks ago or whatever it was? So let's talk about the Federal Reserve as well, right? Large banks are well positioned to weather a severe recession, with all 31 banks subject to the Federal Reserve's stress test this year remaining above their minimum capital requirements during the hypothetical situation. While the severity of this year's stress test is similar to last year's, the test results in higher losses because bank balance sheets are somewhat riskier and expenses are higher, said Fed Vice Chair of Supervision Michael Barr. Under the hypothetical situation, the banks would have lost almost $685 billion. The scenario assumed a 40% decline in commercial real estate prices and a 36% decline in house prices, with a 10% unemployment rate. So that surrounds the majority of the news that we're kind of looking at to pretty much wrap up this week. Remember, this morning we had final GDP numbers. Let me just see what those were. It is Thursday after all. Tomorrow we have the all important PCE, Fed's favorite inflation gauge pre-market. We had the quarter over quarter final, 1.4% expected. It came out 1.4, the GDP. We had the U.S. jobless claims this morning, 235,000 expected, 233,000 came in. U.S. core PCE prices final, right, the prelude number, 3% expected, 3.1 came out. Markets bounced a bit from that news this morning. So in terms of news throughout the day, we've got pending home sales, EIA natural gas inventories, and then we have a $44 billion 7-year note auction and a Fed's balance sheet to wrap up the day. So that pretty much concludes the majority of the news to take a look at this morning, going into the end of the week. And tomorrow's Friday, we'll be doing our classic live stream on Friday. So I'll see you guys in there. Now, in terms of the futures market here, the S&P 500 has been holding the balance very well. It's been holding the bottom balance really nicely. We've been bouncing in and around that 55-20 area and above. The bottom of the balance is 55-24 region. So as long as we hold that area, we're trying to climb now into that next minor distribution above 55-44 area. If we can maintain above 55-35 to start the day, we can progress to make a move higher. I'm looking for this thing to have bottomed out. Remember yesterday we had that slump pre-market, and I wasn't too fond of that selling. I thought that we'd see a little bounce, and we did. And this is the point, right? If inflation data comes out softer than expected tomorrow, we're probably going to see a nice Friday rally, which is kind of what the expectations are. Today, we're going to have a lot of eyes on that 55, 33, 35 area to see if we can actually hold a higher low and see if we can press on higher towards that 55, 60 on the S&P. That's mainly what I'm going to be looking at. The tech side of things are still holding out a bit stronger here realistically, which I like. It's showing good momentum. And remember, eyes on NVIDIA, especially if you're trading around tech. So that wraps up this morning update here. A little shorter, I guess, but not too much crazy stuff to talk about. I think we're going to have a little more with this debate tonight. And we'll see what that looks like tomorrow morning along with that PCE data. So let's open up our live trading room. I'll see you guys in there. I'll see you guys tomorrow for our live stream, and I hope everyone has an amazing trading day. Thank you all, and we'll